Hi there, everyone. Thank you for joining us today. I'm Marche, the webinar director here at Advice Chaser. Before we introduce our guests and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We're thrilled to bring you this educational presentation today. Attendees are muted, but we do encourage you to ask questions using the chat box, and the presenter will answer those queries during or after the presentation today as appropriate. If you ask a question in the chat box and we're not able to get to it, go ahead and leave your contact information as well. And if we're not able to get to your question, we'll make sure someone reaches out to you after today's event. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. I'd love to introduce you to our guests today. Our moderator is Sean McElderry, and he is the CEO and founder of Monarch Wealth and Retirement Strategies. He is a certified financial fiduciary and has 22 years of experience in the financial services industry. As financial professionals, Sean and his team are committed to helping people create solutions for their retirement assets. Once they understand risk tolerance, time horizon, and goals, they work to develop a program that carefully balances investment strategies with preserving principal. Our presenter today is Carly Chauhan, and she is a certified public accountant and tax director at the LSC Group, LLP. She earned her bachelor's and master's from the University of Miami School of Business. And many people have so much going on that they really don't focus on their tax and financial planning needs. Carly and her team find solutions that will allow you to achieve your tax and financial goals, allowing you to spend more time doing what you enjoy without having to worry about your tax future. And I'm going to go ahead and turn over the time to you, Carly. We're excited to have you here, and take it away.
Hi, everybody, and thank you again for having me, Advice Chaser, and to see everybody out there today. The topic we're going to be covering is the newly enacted Inflation Reduction Act. As noted here, was enacted on August 16th. And unfortunately, I'm going to preface this entire presentation today with there is still a lot that we do not know. The IRS, the government, has promised to come out with updates before the end of the year, but I'm here to give you as much information as we do know, and hopefully you can take away some tidbits. Now, the purpose of this act is to make investments in our economy by reducing prescription drug costs, healthcare costs, and energy costs. There is a big focus here on the fighting climate change, and you're going to see that with a lot of these energy credits. And of course, helping our small businesses. And again, the main goal is to reduce inflation by reducing the deficit. So as I alluded to before, a lot of these are going to be focused around energy credits. And the first one we're going to discuss today is the Clean Vehicle Credit. So this credit replaces the existing qualified plug-in electric drive motor vehicle credit. So that one is going to, from August 16th forward, that credit no longer exists. This new credit generally applies to vehicles that are placed in service after 22 and prior to 2033. and it's going to be available for purchases, not leases, purchases of qualified electric vehicles, including some of these hybrid plug-ins, hydrogen fuel cell electric vehicles, and again, placed in service before 2033. So here are some key changes compared to the old credit for new vehicles. So a lot of the focus of this credit is how the car is made. So again, part of it is that the final assembly of these vehicles must take place in North America. There was a 200,000 vehicle manufacturer limitation on the old credit. That has since been repealed, which means that some vehicles that the credit expired actually do now qualify. Now, the maximum credit is still $7,500, but these new vehicles must meet very specific requirements. And those requirements are surrounding the critical materials and battery components that make up these vehicles. So the requirement is that there's a certain percentage of critical components and battery minerals that must be manufactured, processed, extracted, or produced in the United States or in countries with that the United States has entered a free trade agreement with. So again, very specific as to these requirements. Now, if only one of these requirements are met, either the critical material or the battery component requirement, then the maximum credit that you can get on this vehicle is $3,500. Now, there are limitations based on your adjusted gross income. So as you can see, based on your filing status, the various limitations. Note that these are cliff limitations, meaning if you are married filing joint and your adjusted gross income is $301,000, you completely lose the credit. And starting in 2023, there will be some additional pricing restrictions as well. And that's going to have to do with the MSRP of the vehicles themselves. So we can jumping ahead. So again, now for used vehicles, there will also be eligible for some reduced credits as well. And the credits here are going to be a maximum of $4,000 or 30% of the vehicle cost, whichever is less. Now, the vehicle has to be at least 2 years old, and it will have to follow the same requirements with the battery and the critical materials. However, the North American assembly restriction will not apply for vehicles in 2023. Now, beginning in 2023, as I mentioned with the new vehicle, there will also be a price limitation, and they have to be under $25,000. Again, there's also the AGI limitation here, which is much lower. Again, it is a cliff, so $1 will potentially disallow you from being eligible from this credit. Now, one thing I do want to mention as well on the vehicles is you will, when you're filing your tax returns, there will be a form for you to complete with your tax return. On the form itself, you will need to enter the VIN number of your vehicle to pretty much prove that you qualify for this credit, excuse me. Now, it is not going to be on the onus of us poor CPAs to determine if your vehicle qualifies or not. The IRS is going to have a website. It will be continually updated with as cars become qualified for this vehicle, or maybe become no longer qualified for this credit, they will be updating their website. So with all these clean vehicles out on the roads, we're obviously going to need some more chargers. So there have also now come out with a credit for electric vehicle chargers, and that will be 30%. And that is going to be the cost of the hardware plus the installation costs. Now, starting in 2024, there will be an option for the clean vehicle credit on the cars to either submit on your tax return and submit the form and get the credit on your tax return, or you can actually push the credit to the dealer. So the dealer will reduce the price of your vehicle, and they will in turn turn around and be able to remit and get the credit themselves. Now, again, all of the credits that I have discussed so far today are federal. In the state of California, there is no credit for your state income taxes. However, there are going to be some rebates that you can apply for. And if you go to cleanvehiclerebate.org, you'll be able to see, based on income levels and the vehicle you purchase, if you're eligible for any rebates. LADWP will also be offering various rebates for, charging your car at the off-peak hours, or the chargers that you install, etc. So again, no state income tax credits, but there will be some state credits out there for you to apply for.
Carly, we do have a quick question. Do these credits also apply to businesses that purchase electric vehicles?
That purchase electric vehicles, is that what you asked for?
Yes.
Okay, so at this time, all of the literature that we're seeing these are going to be for personal. So this is individual on your individual income tax return. Again, waiting for more guidance to see if there will be any business credits, but at this point, it's strictly your personal vehicle. So moving away from your car, there also have been some expansion of the home improvements. So the energy efficient home improvement credit, which replaces the credit formerly known as the non-business energy credit, has been expanded to apply to purchases of qualified property through 2032. So January 1st, 2033. Now, this is not the solar credit, and we'll get to that next. But what we're talking about is installing such items as energy efficient items such as windows or doors, skylights, etc. So a few highlights I did want to cover. It's increasing the credit from 10 to 30% of the cost, and the cost will also include the labor. So not just what the item you're purchasing, but any labor associated with installing said property. This also doesn't only have to apply to the taxpayer's principal residence. So if you have a second home or a vacation home, it will energy efficient property placed there will also be eligible for the credit. This does not apply to rental properties. It has to be, again, your personal use property. Now, the credit is $1,200 annual credit limitation. Now, the credit used to be a $500 lifetime credit, but if you move to CPAs and you applied for this $500 credit every few years, there really was no way to check it. So the government obviously said, okay, it makes more sense to just make this an annual credit. And again, there are limitations, as you can see below, $600 for items, windows, depending on the item that you are installing. They are continuing here again to expand the list of qualified energy property. So as you are looking to add these items into your home, please do check out the IRS website and see if you may be eligible for some of these credits. So moving a little away now from the energy, the climate change fight piece of the act, and into kind of some of the health and tax benefits. So in October of 22, a big change to the premium tax credit was announced. So not only are they extending this credit for additional 3 years, but they're also expanding who may be eligible. by changing the AGI limitations, as well as the who can actually be eligible for these subsidies. So because of this, we're finding that where an employer covered the employee, and maybe the dependent or the family had to pay out of pocket, it was very expensive for said employee. But now, because of the expansion and especially the expansion of family coverage, your family may now be eligible for some of these subsidies. So with open enrollments coming up very soon for many people, now is really a time to double check and see if maybe you are eligible for some of these subsidies to help with those health insurance premium costs that are not covered by your employer. Another item here to note with Medicare is some of the caps on the out-of-pocket costs, the limits on the increase in the Part D premiums, and then of course these, making vaccines free. And finally, another item to note is doubling the amount of the research credit that you can actually, for qualified small businesses, that you can apply against payroll taxes. So again, just another place to try and help small businesses who are researching and have these research development costs. Maybe they don't have any income, so the credit wasn't helping them as far as income tax is concerned, but if they have payroll, they will be able to reap some of that benefit. And finally, how can we fund these items? How with these credits, and where is the funding coming from? So there's a few primary sources. The first one, as I'm sure we've all heard, the IRS has recently received quite a bit of money, quite a bit of funding. Hopefully they're going to start answering the phone. But in the meantime, we've been, a lot of where they're going to find the money to pay for some of this act is through increased audits, collections, and compliance initiatives. So while we believe that the chance of being audited remains relatively low, we do anticipate seeing these numbers increase. There also has been an extension of the excess business loss deduction for non-corporate taxpayers, which pretty much means if you had a loss, you may be limited on how much you can use in the current year, and the rest will be rolled forward to be used in an upcoming year. There is talk of a new excise tax on stock repurchases, and finally, a 15% minimum corporate income tax on corporations with average financial statement income in excess of $1 billion. So again, money has to come from somewhere, and these are the places where we anticipate or have heard, that will be the funding from.
All right, we're going to go ahead and open it up for a couple questions here. And Sean's going to go ahead and take those just a second. I'll start with the first question. Carly, what kind of questions are you getting from your clients about this new act?
Well, I already have heard, does this car qualify? Should I buy this car? A lot of the car questions, because that is pretty much the biggest chunk of this act. And as I said in the beginning, unfortunately, I have to say, I don't know, because the credits, excuse me, there are a handful of cars that do qualify, and the IRS website does contain those vehicles. But we anticipate many more car manufacturers wanting to comply, wanting people to be able to get this credit. So we hope that this list will expand. But in the meantime, as I think Sean would agree, purchasing a vehicle, the primary reason should not be to get a credit. There should be other financial factors considered as well.
Going back, one question we had here is for the home improvement credits, the $1,200 a year. Is that something that can be carried forward at all if you do a lot of improvements in 1 year, or do you have to do it each year and just spread it out?
In the past, it was a $1,200 max. Again, we are waiting for final guidance on exactly how this will be applied, but assuming it's the same as the old credit as far as the treatment, it's going to be just a $1,200 annual, and that's it.
Okay, and it looks like we have another question here. Will the money Medicare saves from lower prices mean lower premiums, et cetera, for seniors?
That is a question I cannot answer. It's presumably, but again, I think it's more about keeping more money in the taxpayers' pockets to be spent on other items.
And one last question is, what is the best way to determine what credits are available to me? Like, how should I go about doing that? Best through a CPA, or if I do my taxes on my own, is there any resources?
Yes. So again, the IRS website is going to be, they have a specific section on there with the makes, models, VINs, etc. of vehicles that will be eligible for the credits. Again, as more cars come out, we anticipate this list to grow. We also anticipate this list to shrink. And also the IRS website does have quite a bit of guidance as far as the windows or other energy improvement items that you put into your home that are eligible and that are not. California, as I mentioned too, they will also have a website as far as the clean vehicle rebates that you may be eligible for as well. So there will be a lot of information out there. I will tell you that CPAs are not going to know any more or any less than the average taxpayer as far as which vehicles, energy improvement, property, etc. are eligible. So I would definitely be using the IRS website as the guide.
Sean, did you want to read that clarification here?
Yeah, Carly, you'd mentioned for the home improvement, it had to be the primary home. I think just to clarify, the primary home, or it could be a vacation home, right?
So again, the old credit, it had to be the primary code home. The new credit, it's your primary residence. It can also be a secondary home or a vacation home. Again, it has to be though that you use for personal. It cannot be a rental.
Okay, so I think the follow-up to that is there's a lot of folks that have vacation homes, but they Airbnb them. Would that just, basically disqualify them completely? Is there some?
That will probably be worked out in the regulations. At this time, it used to be, it was an all or nothing, but we'll have to wait and see if the regulations do address that.
Okay, great.
Well, that's about all the time we have for questions. I do want to thank you both for being here. Kind of a short and sweet webinar, but we will give people their day back. If you had a question that we weren't able to get to, go ahead and again, put your contact information in the chat. We'll be happy to reach out to you after today's event. Thank you, Sean and Carly, and for the organizations that have made this webinar possible today. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. And it is free for our matching service as well. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we'll see you at another webinar soon. Goodbye, everyone.
Thank you.